If you're still not profitable in trading, it's not bad luck. It's not the market attacking you. It's because there are 8 silent mistakes draining your account every single day, and most traders don't even see them happening. Today, I'm going to expose every one of them, so you finally stop losing money and start trading with real confidence. Trading is not supposed to be a guessing game, but for many beginners, it somehow becomes one. You jump into trades hoping for profit, only to watch the market move the opposite direction. You study charts, watch videos, follow strategies, but the results still don't make sense. And the most frustrating part, you know you're trying, but the account balance keeps telling a different story. The truth is simple. You are not losing because you're incapable. You're losing because no one taught you the real reasons traders fail. Most beginners look for the perfect strategy, but the real problem isn't the chart. It's the habits behind the chart. It's the emotions, the mindset, the impatience, the lack of discipline, and the pressure to win quickly. These things quietly control your decisions, and before you realize it, you're stuck in the same cycle. Overtrading, chasing losses, entering too early, exiting too late, or risking more than you should. This video will break down the 8 reasons why you still have no profit in trading. These are not excuses. These are the hidden truths most traders never want to confront, because facing them requires honesty, and honesty is where real growth begins. Once you understand these reasons, your entire approach changes. You stop trading like a gambler and start trading like someone who respects the game. You stop relying on hope and start relying on discipline. You stop fighting the market and start working with it. So if you are tired of blowing accounts, tired of repeating the same mistakes, tired of watching other traders improve while you feel stuck, stay with me, because by the end of this video, you'll finally understand what has been holding you back and what you must change to start seeing consistent progress in your trading journey. 1. You trade without a real plan. Most traders lose before they even click the buy or sell button, and they don't even realize it. Why? Because they enter the market without a real trading plan, not a screenshot of someone's strategy, not a random indicator setup. A real plan. A plan that tells you exactly when to enter, when to exit, why you're taking the trade, and how much you're willing to risk. Without this, you're trading blind. Think about it. You open your charts, see a candle moving fast, feel the excitement, and jump in because it looks good. That's not a plan. That's emotion disguised as opportunity, and that emotion is the reason your account keeps shrinking. A plan removes guesswork. A plan protects you from impulse. A plan gives you consistency, and consistency is the only path to profit. When you don't have a plan, every move becomes dangerous. You enter too early because your heart tells you this might be the one. You exit too late because you're hoping things will turn around. You widen your stop loss because you don't want to accept the loss. You double your position because you want to recover faster. These reactions don't come from a strategy. They come from panic, fear, and pressure. A real trading plan answers 3 things. 1. What are you looking for? Your setup. 2. What must happen before you enter? Your confirmation. 3. What will you do if it fails? Your risk limit. Most beginners only have the first one. They know the setup, but they ignore confirmation. They ignore risk. They skip rules whenever they feel like it. And that's why losses feel random. They're not following a system. They're following emotions. With a plan, you remove confusion. You stop overthinking. You stop chasing random trades. You start waiting for your exact conditions. And the more you repeat your plan, the more you master your edge. Professionals follow their rules even when it's boring. Beginners break their rules the moment they feel uncomfortable. Profit doesn't come from luck or timing. It comes from discipline. So if you truly want to flip your trading journey, start by building a plan you trust, and then execute it with consistency. Because a trader without a plan isn't a trader at all. He's just a gambler, trying his luck in a market that rewards only the prepared. 2. You risk too much per trade. One of the biggest reasons traders fail isn't the strategy, the pair they trade, or the broker they use. It's the amount they risk. every time they enter the market. Most traders don't blow accounts because of one bad setup. They blow accounts because they risk too much, too often, with no awareness of what their psychology can actually handle. When the risk is too high, even a good strategy feels like torture. Here's the truth. Your brain cannot think clearly when the money on the line is more than what you can emotionally accept. You open a trade with a big lot size, and suddenly, every candle movement feels personal. Your heart beats faster. Your hands shake. You stare at the screen like your life depends on it. That's not trading. That's stress gambling. And stress always leads to bad decisions. When you risk too much, small pullbacks feel like disasters. Normal corrections feel like attacks. And instead of following your plan, you react emotionally, closing early when you should hold, or holding when you should cut. The market isn't beating you. Your oversized risk is. Your psychology collapses under the pressure you created. Real traders know one thing: survival is everything. If you lose small, you can recover. If you lose big, you destroy weeks of progress in one moment of panic. But beginners do the opposite. They want to win big instantly, so they increase risk, hoping for fast results. And those same traders end up asking why their account doesn't grow. Risking too much also creates a dangerous cycle. After a big loss, you feel the need to recover quickly, so you increase your lot size again. Then you lose again, and now you're stuck in a mindset where the only solution you see is taking even bigger risks. This cycle doesn't end in profit. It ends in a white account. If you truly want consistency, you must risk an amount that feels boring, calm, and manageable. Professionals don't chase big wins. They chase perfect execution. They protect their capital because they know the market will always give another opportunity. But if your account is gone, you have no chance to take it. So ask yourself, are you losing because your strategy is bad, or because your risk is too big for your mind to handle? Lower your risk, reduce your pressure, and you'll see how much clearer the market becomes. Profit comes to traders who respect risk. Loss comes to traders who disrespect it. 3. You let emotions control you. Most traders think the market is their enemy, but the real enemy is inside them. It's the fear, the greed, the hesitation, the excitement, the frustration, and the pressure that push you into decisions you would never take if you were calm. Your emotions are responsible for more losses than any bad strategy ever will. And until you learn to control them, the market will continue to control you. Think about your losing trades. How many of them came from breaking your own rules? You entered too early because you didn't want to miss the move. You exited too late because you hoped the market would turn around. You doubled your risk because you wanted to recover the loss fast. None of these decisions came from logic. They came from emotional reaction. Fear is the most destructive emotion in trading. Fear makes you freeze when you should exit. It makes you hesitate when the setup is clear. It makes you second-guess your plan even when nothing is wrong. Fear keeps you in losing trades because you can't accept being wrong. And fear also pushes you out of winning trades too early because you can't handle the pressure of seeing profit fluctuate. Then there's greed, the emotion that whispers, just a little more. Greed blinds you from reality. You turn a clean winning trade into a losing trade because you don't know when to stop. You ignore your take profit. You ignore your risk reward. You ignore the signs that the market is reversing. Greed convinces you that every single trade should be a big win, and that mindset destroys accounts more than any technical mistake. And the most dangerous emotion of all, revenge. The moment you lose a trade, something inside you wants to take it back immediately. You chase the next candle, the next breakout, the next signal, hoping to erase the pain of the loss. But revenge trading never leads to recovery. It leads to deeper losses, faster mistakes, and emotional collapse. The truth is simple. The market doesn't care about your feelings. It doesn't reward desperation. It doesn't feel guilty when you lose. It doesn't slow down to give you time to think. The only way to win is to become a trader who is emotionally stable. A trader who can take a loss without losing control. A trader who can follow the plan even when it feels uncomfortable. A trader who thinks in probabilities, not emotions. You don't need to remove your emotions. You need to learn to trade above them. Because the day you stop letting emotions make your decisions is the day you finally start trading with power, clarity, and confidence. 4. You keep changing strategies. One of the biggest traps in trading is the constant search for the perfect strategy. You try something for a week, you lose a few trades, and immediately you think the strategy is broken. So you look for another one, and another one, and another one. Before you know it, you've tried 10 different systems, learned 100 indicators, and mastered nothing. This cycle is why you stay stuck. Changing strategies all the time destroys your consistency. A strategy is like a muscle. It gets stronger the more you use it. But if you keep switching, it never has time to grow. You never learn how it behaves during trending markets, ranging markets, slow sessions, or high volatility conditions. You only see this strategy during your emotional moments, and you judge it based on short-term results instead of long-term performance. Every strategy loses sometimes. Even professional traders with decades of experience have losing streaks, but beginners think losing means the system is useless. They don't understand that drawdowns are part of trading. They don't understand that the goal is not to win every trade, but to win consistently over hundreds of trades. You can't judge a strategy by 3 losses. You judge it by long-term data, discipline, and execution. When you constantly change strategies, you also destroy your confidence. You enter trades with doubt, asking yourself if this method will fail again. You hesitate because your brain is still thinking about the last system you used. You mix rules from different strategies, and your charts become a mess. At this point, you're not trading a strategy, you're trading confusion, and confusion leads to emotional decisions. You start forcing trades because you want to test a new system quickly. You take setups that don't even match the rules. You keep adding indicators to fix your strategy, when in reality, the problem isn't the strategy, it's your lack of commitment to it. The truth is simple. Any strategy can work if you master it. You don't need 10 systems. You need one system you understand deeply, one setup you trust, one pattern you can execute with discipline. Professional traders aren't the ones who use the most indicators. They're the ones who repeat the same setup until they know it better than they know themselves. Consistency doesn't come from switching strategies. It comes from staying with one long enough to learn its strengths, weaknesses, and behavior. So stop jumping around. Stop resetting your progress. Choose a strategy, study it, backtest it, practice it, and stick with it. Mastery takes time, but mastery is the real path to profit. 5. You don't respect risk management. One of the hardest truths in trading is this: you don't lose because the market is unpredictable. You lose because your risk management is weak. Risk management is the foundation of every profitable trader's success. Yet it's the one thing beginners ignore the most. You want big wins, fast results, and explosive growth. So you take trades without calculating risk, without defining limits, and without protecting your capital. That mindset is exactly why your account never grows. Risk management is not just about stop losses. It's about understanding how much you can afford to lose without destroying your confidence, your psychology, or your account. Most traders focus only on potential profit, but professionals focus on potential damage, because they know that one uncontrolled trade can erase weeks, even months of progress. When you don't respect risk management, every loss feels painful. You widen your stop loss because you can't accept being wrong. You add more positions because you believe the market has to come back. You increase lot size because you want to speed up your progress. These actions don't come from skill. They come from fear, greed, and frustration, and they lead you straight to blown accounts. A trader without risk management is like a driver without brakes. No matter how fast or skilled you think you are, you will eventually crash. You may win a few trades with reckless risk, but those wins only build false confidence. Sooner or later, the market will remind you why discipline exists. And when that reminder comes, the damage is brutal. The truth is simple. Successful traders think in probabilities, not certainties. They know no strategy wins 100% of the time. They know losses are part of the game. They know that protecting capital is more important than chasing profits. This mindset allows them to stay calm, stick to their plan, and survive long enough to see consistent gains. When you respect risk management, everything changes. You stop caring about being right and start caring about being consistent. You stop chasing huge wins and start focusing on steady growth. You stop blowing accounts and start building them. Risk management doesn't make trading easier, it makes trading possible. It gives you time to learn. It gives you space to grow. It gives your strategy the chance to work, and it allows you to trade with confidence instead of fear. So remember this: you don't need more indicators. You don't need more strategies. You don't need more signals. What you truly need is respect for risk, because profit comes later, but protection comes first. 6. You trade too often. One of the most common reasons traders stay unprofitable is simple. You trade too much. You feel the need to be in the market constantly, as if taking more trades will automatically increase your chances of winning. But the market doesn't reward activity, it rewards precision. Overtrading is one of the fastest paths to emotional burnout, inconsistent results, and blown accounts. Beginners believe every movement is an opportunity. A candle forms, and you jump in. A breakout appears, and you chase it. A pullback comes, and you try to catch it. You keep clicking buy and sell because you think the more you trade, the more money you'll make. But the truth is the opposite. The more you trade, the more mistakes you make. And those mistakes cost you far more than the trades you skipped. Overtrading happens for many reasons. Sometimes it's boredom. You want action, so you create trades that don't exist. Sometimes it's excitement. You win one trade and suddenly think you're unstoppable. Other times it's revenge. You lose, get emotional, and jump into another trade without waiting for a real setup. Whatever the reason, the result is the same: poor decisions, weak entries, and unnecessary losses. Professional traders don't trade all day. They trade only when the market gives them a high-quality setup that matches their plan. They understand that patience is not optional. It's part of the job. They wait for their edge. They wait for confirmation. They wait for the perfect moment where their strategy and the market align. And when that moment comes, they act with confidence. But beginners force trades. They see movement and feel pressure to join it. They fear missing out, so they chase every trend. They don't wait for signals. They react to every candle. This behavior turns the market into a battlefield where emotions lead and logic disappears. Overtrading also destroys your psychology. When you take too many trades, your brain becomes overwhelmed. You start losing track of your rules. You forget your risk limits. You confuse impulsive trades with planned trades. And before you know it, you're just clicking buttons, hoping something works. That's not trading. That's desperation wrapped in activity. But here's the truth you must understand. You don't get paid for effort in trading. You get paid for accuracy. One good trade is more powerful than 10 random trades. One perfect setup can grow your account more than a full day of emotional decisions. Real consistency comes from quality, not quantity. When you stop overtrading, everything improves. Your win rate becomes clearer. Your losses become smaller. Your mindset becomes calmer. And your confidence grows. Because you finally feel in control. The market rewards the patient, the selective, and the disciplined, never the restless. 7. You expect fast results. One of the biggest reasons traders fail is not the market, not their strategy, and not their skills. It's their expectations. You want results instantly. You want profit today. You want success without the struggle. You believe trading should give you fast money because you've seen people on social media turning small accounts into huge ones. And because of that, you put unrealistic pressure on yourself and destroy your own growth before it even begins. Expecting fast results is dangerous. It makes you rush setups, ignore confirmations, increase your lot size, and take trades you know you shouldn't take. You want to grow your account quickly, so you take shortcuts. But shortcuts in trading always lead to long-term damage. Fast money creates slow disaster. Think about how many times you entered a trade, not because it was part of your plan, but because you wanted to see profit now. How many times you increased your risk, simply because you wanted a big win. How many times you held a losing trade too long, because you hoped it would magically reverse, helping you recover everything in one move. These are not technical mistakes. They are expectation mistakes. Trading is a skill, just like learning to drive, learning to cook, or learning a sport. It takes time. No one becomes a master in a week. No one becomes consistent in a month. But beginners treat trading like a shortcut to easy money, and that mindset alone guarantees failure. You cannot rush mastery. You cannot speedrun discipline, and you cannot become profitable just because you want it badly. When you expect fast results, every small loss feels like a huge failure. Every winning trade feels too small. Every slow market feels like a waste of time. Your emotions explode because your expectations are unrealistic. You become impatient, frustrated, and desperate. Three mindsets that destroy traders faster than any trend reversal. But here's the truth that profitable traders understand. Trading rewards patience, not speed. The slow, steady path is the only path. You build skill slowly. You build confidence slowly. You build discipline slowly. And over time, these small improvements stack into massive results. Successful traders don't chase big profits. They chase growth. They chase consistency. They chase mastery. They know that if they improve by just 1% every day, their results will multiply. They understand that slow is smooth, and smooth becomes fast. So ask yourself, are you failing because you're bad at trading, or because you're trying to rush something that was never meant to be rushed? If you embrace patience, your mindset changes, your discipline strengthens, your results stabilize, and slowly but surely, you become the trader you always wanted to be. Because the market doesn't reward the fastest, it rewards the ones who refuse to quit, the ones who stay consistent, and the ones willing to learn with patience. 8. You don't track or review your trades. One of the most overlooked reasons traders stay stuck is this: you never review your trades. You take a win and move on. You take a loss and try to forget it. You jump into the next setup without understanding what actually happened. You're trading blind to your own patterns, blind to your own mistakes, and blind to your own growth. And when you don't track anything, you repeat the same errors over and over without even realizing it. A trade journal is not boring. It's the most powerful tool a trader can use. It tells you everything your emotions try to hide. It shows you when you break your rules, when you enter too early, when you exit too late, when you over-risk, when you hesitate, and when you perform at your best. It's the mirror that exposes your real trading personality. Without reviewing your trades, you think every loss is bad luck. You think every win is skill. You think every mistake is isolated. But trading doesn't work like that. Losses have patterns. Wins have patterns. Your behavior has patterns. And those patterns determine your entire trading career. Think about it. How many times have you made the same mistake? Overtrading, entering late, taking trades outside your plan, ignoring your stop loss. Why does it keep happening? Because you don't track it, you don't face it, you don't study it, and you can't fix what you refuse to acknowledge. Professional traders don't improve by guessing. They improve by analyzing. They look at their losing streaks and ask why. They study their best trades and try to repeat them. They identify which market conditions favor their strategy and which ones destroy it. They treat their trading history like data, not emotion. But beginners trade, lose, get emotional, and jump right back in. No learning, no adjustment, just repetition. That's why months pass and nothing changes. That's why your chart knowledge grows, but your results don't. You're collecting information, but you're not collecting insight. When you track your trades, everything changes. You start seeing your weaknesses clearly. You start understanding which setups truly work for you. You stop forcing trades that don't match your edge. You become more selective, more disciplined, and more confident. A trading journal turns chaos into clarity. The truth is simple. Improvement is impossible without reflection. If you don't review your work, you stay the same. If you don't learn from your mistakes, you repeat them. And if you don't analyze your behavior, your emotions will always dominate your decisions. Trading is not just about charts. It's about self-awareness. And the journal is a tool that builds that awareness. You don't need more signals. You don't need more indicators. You need to understand yourself as a trader. Because once you do, your progress becomes unstoppable. Now you've seen the 8 real reasons why you still have no profit in trading. Not excuses, not theories, not sugar-coated advice. These are the truth. Your blind spots, your habits, your patterns, your weaknesses. And the moment you understand them, something inside you starts to change. Because trading doesn't improve when the market changes. It improves when you change. Your growth starts the moment you stop running from your mistakes and start learning from them. The moment you stop trading emotionally and start trading with intention. The moment you stop looking for shortcuts and start building discipline. The moment you stop rushing and start respecting the process. This is how traders evolve. Slowly, patiently, consistently. You don't have to be perfect. You don't have to win every trade. You don't have to be the smartest person in the market. You just need to show up with the right mindset and the right habits. And if you keep improving one step at a time to 1% each day, your results will eventually reflect that growth. Consistency is built, not found. Profit is earned, not wished for. And success in trading belongs to those who refuse to quit. So if this video helped you, if it opened your eyes, if it made you realize what you've been doing wrong and what you need to change, then do me a favor, like this video, share it with someone who needs it, and subscribe for more trading wisdom. Just like this, your journey doesn't end here. This is only the beginning. The moment you apply these lessons, you shift from being a frustrated trader to a focused, disciplined one. And that version of you, that's the trader who finally sees progress. That's the trader who finally sees growth. That's the trader who finally starts becoming profitable. Stay disciplined, stay patient, stay hungry, and always remember, trust your process, and the profits will follow.